Good morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. The banking system's non-performing loans ratio rises to 3.39% in April. The Senate passes on third and final reading an accelerated and reformed Right-of-Way or ARROW Act, which aims to hasten land acquisition for government projects. And the Filipino-American Attorney General of California sues the Trump administration for deploying National Guard troops to quell protests. And later in the show, alternative investments in focus. Eddie Galvez, the president of GG&A Club Shares Philippines, joins us to break down why club shares are gaining ground with investors. Talks between the United States and China are going well, according to President Donald Trump. Trump gave the assurance amid positive signals from trade talks currently underway in London, where senior U.S. and Chinese officials are in closed-door discussions. Trump says he's still deciding whether to impose export controls on Beijing, a move that could further rattle global supply chains.
China's not easy, just like your home country is not easy there. I think we're doing very well. They're over there now. I'm only getting good reports. It's a little early, but they'll be calling in soon. In fact, probably when I get back, I'll have my first call from them. We want to open up China. And if we don't open up China, maybe we won't do anything, but we want to open up China. It'll be a great thing for China, a great thing for the rest of the world.
Are you willing to lift export controls when it comes to China? Did you give your negotiators any sort of limitation?
We're going to see. Look, China has been ripping off the United States for many years. Nobody charged them 10 cents. No president had the courage to charge China for whatever reason. They didn't want to do it.
The first round of meetings under the U.S.-China Economic Trade Consultation Mechanism wrapped up Monday in London, with both sides expected to continue talks today. For Philippine exporters and investors, a potential trade deal could help stabilize markets, improve global demand, and lift commodity prices, including oil, metals, and agricultural products. Let's take a look at how global financial markets performed overnight amid fresh signals from the U.S.-China trade talks. U.S. stocks closed mixed Monday, stabilizing after April's steep sell-off, as investors kept a close eye on negotiations between Washington and Beijing. Market sentiment appears to be improving. Even Google searches for tariffs have dropped 87% since peaking in early April, a sign that fears may be fading. The two sides are back at the table trying to build on a preliminary trade deal struck last month, which temporarily cooled tensions between the world's two largest economies.
I think the protests in LA are somewhat expected. California is certainly a left-leaning state, and we have a right-leaning government. And certainly policies that the Trump administration are following are not popular in the big state of California, especially in LA. So the markets are always going to say, gee, that's terrible. Well, what does it mean to me? What does it mean to corporate earnings? Now, if this were to become way more pervasive and literally stop businesses from doing business, then the markets might react. But it's too early in that cycle. Hopefully we never get to that place. But the markets just want to make sure that it's not going to disturb business in a long-term way or in a major way.
The Dow Jones Industrial Average closed flat. The S&P 500 higher by just 0.1%, and the tech-heavy Nasdaq higher by 0.3%. Over in Europe, markets slipped as investors braced for policy uncertainty and global demand risks. The FTSE 100 lower by 0.1%. The DAX lost 0.5%, and the CAC 40 lower by 0.2%. The Philippine banking system's bad loan ratio climbs to its highest level in 5 months, signaling rising credit risks in a still soft economy. Data from the Bangko Sentral ng Pilipinas shows the non-performing loan ratio rose to 3.4% in April, slightly above March's 3.3%, but below the 3.5% recorded a year ago. It's the highest reading since November 2024, when the ratio hit 3.5%, a possible sign that households and businesses are still struggling to manage debt in a high-rate environment. Loans are classified as non-performing when payments are overdue by 90 days or more, flagging them as risk assets that could erode banks' balance sheets if left unmanaged. With credit conditions still tight and consumer spending weak, analysts say watching NPL trends is crucial, especially as markets anticipate rate cuts from the BSP. The Senate clears the runway for major projects, greenlighting a bill to cut land acquisition delays or right-of-way issues. Sponsored by Senator Mark Villar, the Accelerated and Reformed Right-of-Way Act, or ARROW Act, seeks to streamline land acquisition for public infrastructure. The goal, to prevent the kind of right-of-way disputes that have delayed projects like Skyway Stage 3 and MRT 7, issues that have cost the government time, money, and investor confidence. The bill requires agencies to prepare a comprehensive action plan before taking any land, including an inventory of affected families, cost estimates, timelines, and stakeholder consultation. It also imposes standard land valuation rules to prevent both overpricing and undercompensation, a move aimed at fairness and fiscal discipline. The ARROW Act passed on the third and final reading with a 23-0 vote, moving the country one step closer to faster, cleaner infrastructure delivery. The Philippines and Canada set their sights on a free trade agreement with exploratory talks targeted for completion within a year. Trade Undersecretary Alan Gepti says that the DTI plans to submit its recommendations to national leaders once the talks wrap up, marking a key step toward deeper economic ties with Canada. Gepti has just returned from the second Philippine-Canada Joint Economic Commission meeting, where both sides explored areas of cooperation in energy, ICT, artificial intelligence, and more. He stresses that Manila must position itself as a strategic and reliable player in the Indo-Pacific as Canada looks to diversify trade partners amid all the global uncertainty. For Philippine exporters, investors, and tech players, a future FTA could open new doors to North American markets, knowledge transfer, and sustainable growth. The Securities and Exchange Commission is taking a bold step into the future, expanding the use of artificial intelligence to strengthen the Philippine capital markets. Commissioner Javi Francisco says AI will play a key role in detecting fraud, assessing market risk, and advancing financial inclusion, while promoting ethical investment behavior. As part of this push, the SEC just launched the SEC A-Innovation Platform, a multilingual chatbot that makes regulatory laws more understandable to the public and in real time. It's a move towards smarter, more humane markets designed to make capital markets safer, more transparent, and accessible to every Filipino investor. On another front, Citicorp Renewable Energy Corporation, or CREC, is pouring over $1 billion into green power projects this year in one of the biggest renewable spending plans in the country. The capital is fueling the construction of CREC's renewable energy pipeline as the company accelerates its shift to clean power. At its annual stockholders meeting, President and CEO Oliver Tan revealed that most of the 2025 capex has already been dispersed in the first half of the year. The spending is geared toward energizing 1 gigawatt of capacity before year end, with another gigawatt slated to break ground in the second half. The aggressive rollout reflects growing demand for clean energy and puts CREC in the forefront of the Philippines' push for a more sustainable power grid. Filipino liquor giant Emperador is facing headwinds from slowing whiskey sales to potential tariffs in the United States, but its brandy business remains a bright spot. Sujin Kim has the details.
Filipino-owned Emperador, the world's largest brandy producer and a top 5 global single malt whiskey manufacturer, faces significant headwind in the international market amid a slowdown in whiskey consumption and the threat of U.S. tariffs. The company's whiskey segment saw a sharp decline in earnings, with net income falling more than half year-on-year.
Challenging, as we are seeing a slowdown in the whiskey business across the world. In North America, in China, and even in Europe. The market has become very competitive given the situation.
Amid the global slowdown, Emperador notes a shift towards price consciousness among consumers, particularly in the luxury Scotch category. With 10 to 12% of Emperador's whiskey business tied to the U.S. market, the company is concerned that the resumption of tariffs could lead to higher retail prices for imported products.
We operate on a global supply chain, and so there are aspects that will be affected if the tariff goes online. Our products imported into those countries may have a higher price.
Cost says they're working closely with global suppliers and distributors to mitigate inflationary pressures and rising operating costs. Despite whiskey woes, the company's brandy segment remains resilient, posting a nearly 80% surge in earnings. Emperador ended 2024 with consolidated revenues of 61.65 billion pesos, but net income dropped 27% amid global volatility.
Even as markets were pressured by economic challenges and shifting consumer landscapes, we adapted with agility, gained a deeper understanding of our products and customers, and pivoted when and where necessary.
As part of its long-term strategy, Emperador is focusing on global expansion, acquiring nearly 500 hectares of vineyards in Spain and doubling distillery capacity in Scotland.
Our ongoing expansions in the UK, Spain, and Mexico are testaments to our unwavering resolve to pursue our global aspirations.
The company is also committed to sustainability, aiming for carbon neutrality for White & Mackay by 2030. In parallel, Emperador continues to invest in workforce development programs.
We remain committed to supporting a work environment that promotes well-being, upskilling, and retention.
As the first Filipino company listed on the Singapore Exchange, Emperador reaffirms its ambition to become a global leader in brown spirits.
Because there are all new opportunities that's open to us, an opportunity like China, opportunities like India, which we believe will propel the next cycle of growth. And because of this, we have expanded our Dalmore distillery, and we have enough liquid to meet the demand in the market. So we're excited.
Co expects a rebound in consumption starting next year and says the company remains highly optimistic over the next 5 years. Sujin Kim, Billionaire News Channel.
Hotel 101 scores a 10-year deal to house Formula One fans in style at the Spanish Grand Prix starting 2026. The Philippine-owned hotel brand, backed by billionaires Injapsi and Tony Tancatyon, will rise in Madrid's Valdebebas district right next to the new F1 circuit. Slated to open in late 2025, the 680-room property offers unmatched access to the race, the airport, and Madrid's major hubs. Hotel 101 has teamed up with Match Hospitality, a global player in sports event experiences, to deliver premium service to F1 fans. The company calls this landmark deal a major milestone in its global expansion, centered on comfort, convenience, and speed. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Let's check on how Asian markets are doing this Tuesday morning as investors weigh global growth signals and regional inflation trends. Right now, the Nikkei 225 is in the green, up by 1%. Hong Kong's Hang Seng Index higher by 0.1%, and Shanghai Composite flat with a slight upward bias. Singapore's Straits Times Index as well is flat with a slight upward bias. Here at home, the PSEI started the week on a positive note, rising 0.5% yesterday to 64.06. This as investors cheered the resumption of the U.S. and China trade talks and grew more confident about a possible rate cut by the BSP next week. Now, trade optimism from global markets, coupled with strong U.S. jobs data, helped lift yesterday's sentiment. But activity remained thin, with value turnover just at 5 billion pesos, which is quite thin. Foreign investors also posted net outflows of 205 million pesos. Still, this is the PSEI's second straight close above 6,400, suggesting a degree of stability despite ongoing external headwinds. Now, as of 10:20 this morning, let's take a look at how the market is doing. Right now, okay, we're seeing everything in the red. The PSE index is down by 0.5% to 63.75, back at the 6,300 level. All shares index in the red as well, lower by 0.4% to 37.73. Now, as for all the sub-indices, all are trading to the downside, with the they're all equally lower, a little more on some subsectors, but everything is in the red so early in the morning. Advancers, we've got 41 advancers and 84 decliners, indicating that market breadth is negative, while 43 stocks are unchanged. Total volume of trades is at 170 million. Value is at over 2 billion pesos, which is quite thick for early trading. We're at 2.5 billion pesos in value traded peso terms. Now, at the currency market, the peso opened slightly stronger at 55.75 to the greenback, up from last Friday's close of 55.81. One global bank is sounding the alarm over the peso's long-term trajectory. ANZ Research warns that an overvalued Philippine peso is dragging down the economy, hurting exports and eroding manufacturing competitiveness. Analysts say that the peso has been overvalued since 2019, making Philippine goods less attractive abroad, while cheaper imports continue to pour in. They argue that allowing the peso to depreciate could support growth and shift the economy away from its traditional dependence on imports and remittances. This would mean the Bangko Sentral ng Pilipinas may need to strengthen its foreign reserves, which are currently adequate to shield the peso from external shocks. A U.S.-based think tank, however, offers a more optimistic view, predicting that despite short-term volatility, emerging market currencies like the peso could finish 2025 on stronger footing. Now, while club shares have been around for decades, they're now being reevaluated by investors looking for stability and long-term value outside of traditional markets. In a low inflation, slow growth backdrop, with the peso strengthening and rate cuts widely expected, more Filipinos are turning to alternative assets that offer both lifestyle benefits and potential appreciation. Once seen mainly as status symbols, club shares are now being treated as asset-backed investments tied to prime real estate, exclusivity, and demand for leisure. Joining us to break it all down, from pricing trends to the 2025 outlook, is Eddie Galvez, the president of GGNA Club Shares Philippines, the country's largest SEC-registered firm, trading both proprietary and non-proprietary club shares. Hi, Eddie. Thank you for being with us.
Well, thank you for inviting me, Maiki.
Yeah, good to have you. It's interesting. Let's talk about the club share market in the Philippines, starting with an overview of the demand. How has demand been so far in 2025 amidst the slower growth, low inflation environment, and the potential rate cuts by the BSP?
Well, probably I would characterize it as cautious but consistent. Because club shares has become a part of the lifestyle of Filipinos in the niche market, obviously, that we're talking about, and also for corporations, as part of the benefits that they offer their employees, their top employees, rather.
When you say, Eddie, growth has been consistent, what do you mean by that? Say over the last 5 years, how has the demand been? How has it increased year on year in percentage terms?
5 years ago, the horizon, even 10 years, is might even be a better horizon. In the last 5 years, the top 10 club shares in terms of price have seen an appreciation of roughly an average of 181%, believe it or not. And if you expand that horizon to over the last 10 years, the appreciation of these top 10 have actually been about 500%. So times
Yeah,
5.
outpacing many real estate returns.
Yeah, well, and again, if you expand the list to include the 20 top club shares, the increase is even more. Over the last 5 years, the top 20 have averaged about 230% appreciation, and over the last 10 years, 700%. So overall, out of the 60 or so club shares, about 67, I think, that are traded, no, representing around 40 clubs. Over the last 10 years, the actual appreciation has been about 800%, 8 times.
Okay. I don't want to put you in a spot, but
Sure.
would you be able to tell us who those top 10 clubs are? If you can name 10. If not, we can do 5.
Well, they're the usual suspects, Mikey. You got your Manila Golfs, you got your Orchard, Santa Elena, of course, Canlubang, Alabang, even clubs already like in Cebu Country Club has appreciated tremendously, and up north you have your Tagaytay Highlands. So it's a broad spectrum, really, no?
It's a broad spectrum, broad price range also. Who's buying club shares today, Eddie?
Well, right now, I first you got to understand our business also. On the one hand, you're right. There
The
are
actual club
purchase.
shares.
Yes.
And then there is the rental.
Yes.
You can rent the club
yes.
shares.
Which
Is the bulk of your business?
well, about 55% of our business are really
Okay.
rentals.
Good half, okay.
Yes. Now, who are buying the club shares? I think we're just lucky enough to be in a niche market where I'm not saying they're immune to political or economic shocks, but maybe they hurt a little bit less.
That's right.
So and then you have the legacy. They have children growing up, taking over the businesses and all of that.
It's an inheritance play too.
Yeah, and I think we can agree that no matter what you say, the Philippine economy is still expanding. So the niche market that we cater to is still expanding.
Yeah, absolutely.
And the universe of the club shares is not really growing as much as it used to back in the mid-90s, you recall.
Okay. Are the people buying, are they more strategic investors? Are they more lifestyle investors? What's that mix like?
I think it's a mix, but obviously with the price increase we've experienced over the last 10 years, I mean, people have taken note of that, and a lot of the strategic investors have bought, no? So now there's more of a lifestyle purchase as well, because I think they realize that, the unique aspect about club shares is there's a usage aspect there.
Yeah.
You can enjoy it.
You can enjoy it.
Diba? I mean, you work hard for your money, you deserve to enjoy, your family deserves to enjoy. So not only are you getting into an investment, you also have the usage. And at the same time, if you're tired of using or you don't want to use, you can always rent it out.
Right. Right.
Yeah.
There's a lot of ways to go about
Yeah.
it. It's also a real estate play for the developers. The Rockwell is putting up a beach club in Batangas, similar to what the Ayalas did with Advaya.
Advaya, yeah.
Can you tell us more? You know more than me about that.
Well, I'm if I may be candid,
Yes.
I also have to be a little bit, I can't reveal so much yet.
Okay.
All right.
What you can tell us?
So I know they're putting up, again, like you said, an Anvaya type in Lian, Batangas, that will, I think the plan is 27 holes, and they're also gonna sell real estate, just like Anvaya did, and Anvaya has done very well.
Yeah,
as I'm
lots
sure.
of ways to invest. How have prices of club shares, you mentioned already, for the top 10, that they've increased exponentially.
Yeah.
What about for the other club shares that aren't as premium?
As I mentioned earlier, if we did an average of all of the club shares over the last 10 years, 800%. So even those that were laggards before, but because I used to categorize them between, those that are over 5 million, those over a million, or a lot of shares now are over a million. I mean,
Yeah.
so even the laggards have caught up. Like even Rockwell, to be honest, for the longest time, Rockwell was hovering around 250, 300, and then suddenly, boom! Now it's at a million.
So, Eddie, what does this tell you about the economy that we have, the Philippine economy? What does that tell you?
I think it talks about resilience. There's a resilience there. Sure, I mean, we're going to go through our hard times, but I believe the economy is characterized by the Filipinos. And Filipinos are resilient people.
You know, for people that buy club shares, liquidity is often a concern. How long is the turnover time, generally speaking, for club shares?
You know, if people agree on the price, right, and the documents are complete, wow, a matter of days, 2 days, 3 days. I mean, so you talk about liquidity, especially if you're talking about the premium shares, right? So, yeah, it's pretty fast. Of course, it can drag on for weeks
Yeah.
because we've had documentary challenges where we couldn't close the sale.
The challenge is getting it at the price that you want, is
Yes.
meeting halfway with the
Right.
price. Speaking of the price, there are big price gaps, spreads between buyer bids and seller asks. What is driving the disconnect? What's driving the disconnect?
I think, first of all, I mean, you have clubs like Manila Golf, where you only have 600 authorized shares. You have Canlubang that has 840 shares. Santa Elena, 1,250. And for example, Canlubang only has 1,400 shares despite having 36. So, I mean, again, there's a finite number of shares that's being traded out there. And when you start talking about these exclusive clubs like Manila Golf, unless they really need the money, the people are not going to sell, right? I mean, and if they sell, they will want their price. So the buyers have to be willing to pay for that luxury.
Yeah,
For that
it
exclusivity.
adds to the premium.
Yeah.
Okay, so what's your outlook for club shares in the second half of 2025 and perhaps beyond?
You know, like I said, I mean, we've been through the 1998 Asian crisis, which was really bad in the club share market, to be honest. I mean, you see the 50% drop in price and demand. But people have learned, right? Even the banking system has learned, right? In terms of, because club shares underlying asset, as you mentioned earlier, is what? Real estate.
Yeah.
So I honestly think that if we can just go through this, I mean, the market has appreciated tremendously over the last 10 years. Any market needs a pause, right? Needs a little bit of correction. That makes for a healthy market. So I believe that if once we go through this phase, it will come back even stronger. I mean, the demand will be more robust.
Now, the demand for leisure and investment and will always be there.
Yeah.
And club shares offer that value. Okay, before we go, we're going to do a quick fire round, quick questions and tight answers. All right, you ready?
Okay.
All right, best value club share in 2025.
Best value club share 2025, shoot, Canlubang?
Okay, best club to close a business deal. I think the answer is obvious. It's the most
Manila
expensive
Golf.
one. Okay, Manila
You got
Golf.
power intimidation right there.
Right. Okay, club with the best golf course.
Santa Elena.
Santa
probably.
Elena. Okay.
Although, personally, I love Canlubang because of the natural setting, the very natural setting.
Right. Yeah. Okay. Club with the best amenities.
Polo Club. Polo Club, I think. You know, I mean, let's take away the golf. Obviously, it doesn't have a golf course, but you know, food.
I would
everything.
agree for sports, food,
Yeah.
and leisure. Best overall club. Would that still be Polo?
I would say so. You know, we used to have you used to conduct a Club of the Year awards with Philippine Inquirer with Miss Sandy Prieto. There was a time Santa Elena always won in terms of golf course, so we stopped it after a while. But I think there's, you know, I mean, in terms of club, I think Polo overall will still be the best.
Yeah.
In terms of golf, might still be Santa Elena, to be honest.
Okay. And why should millennials look to club shares as an investment?
Well, as the last 10 years have shown, if you miss it in your portfolio, you really miss a tremendous opportunity, right? I mean, and secondly, hey, I mean, I think it's a good mix for them because it also kind of forces them to balance their life.
Yeah.
Club shares is about also enjoying life's
and
luxuries.
it's going to be a great perk for families
for
as well.
family. Yeah.
All right. Thank you so much, Eddie Galvez, for your time and for talking about the club share market with us.
Thank you for giving me the opportunity.
All right. We're taking a short break. Business 360. We'll be right back. Welcome back. Opposition senators failed to convene the Senate as an impeachment court, with the majority choosing procedure over speed in the case against Vice President Sara Duterte. Instead of opening trial, senators voted to refer the articles of impeachment to the Rules Committee. The chamber also authorized Senate President Chiz Escudero to take his oath as presiding officer of the impeachment court, and approved Senator Joel Villanueva's motion for the rest of these senators to be sworn in as senator judges at 4 p.m. today.
I don't fear that. I don't run away from that. In fact, that shows that we have a vibrant democracy. Ito'y tatapusin sa pamamagitan ng hindi suntukan o anuman, pero botohan. I am performing and doing my role the best way I see fit, without any fear or bias in favor or against anyone.
While no official start date has been announced, Senate Majority Leader Francis Tolentino recommended a condensed 19-day schedule from June 11 to June 30 to expedite the trial. Vice President Sara Duterte's defense team says it's prepared for trial despite assertions that the impeachment complaint is legally flawed. They stress that impeachment should not be used as a tool to harass, silence, or remove political opponents, warning against setting a dangerous precedent. Should the Senate move forward, the defense team says it is ready to meet the charges head-on and vows to expose what they describe as baseless, politically motivated accusations. As the political climate heats up, economic pressures continue to mount, and now lawmakers find themselves at odds over another polarizing issue: wages. Some senators are urging the House to consider a lower wage hike, pushing for a 100 peso increase instead of the House-approved 200 peso proposal. Senator Migs Zubiri clarifies that he is not against the 200 peso raise, but warns that a more modest figure may have a better chance of getting signed into law by President Marcos. Malacanang has earlier said the president wants to strike a balance, protecting both business viability and worker welfare.
I-adopt na lang nila ang Senate version, and let's pass it into law, because kailangan talaga natin manggagawa itong additional boost na kanilang nakita. Pero huwag sana isabotahe, kasi masyadong mataas, masasabotahe talaga.
President Bongbong Marcos named Supreme Court Administrator Raul Villanueva as the new Associate Justice of the High Court. The announcement was made Monday night by PCO Undersecretary Claire Castro. Villanueva fills the vacancy left by recently retired Associate Justice Mario Lopez, bringing with him over 2 decades of courtroom experience and judicial service. PBBM also announces 2 more key appointments. Yusek Maria Teresa Lazaro is now Secretary of Foreign Affairs, while Pablito Austria Mendoza is named Ambassador to Denmark. On another front, Chinese luxury car brand Hongqi is expanding in the Philippines with a new showroom, more electric vehicles, and plans to compete head-on with legacy auto brands. G. Baroga tells us how Hongqi is positioning itself in the country's growing electrical vehicle market.
It's getting a little busier and a lot more exciting in the Philippine electric vehicle scene as more and more brands jump into the market. One of them is Hongqi Philippines, a luxury Chinese car brand with a long and storied past, and now big plans for the future. Competition doesn't scare Hongqi. In fact, they're embracing it. It adds, that's exactly what keeps the energy high. Billionario heir and Hongqi Philippines President Rashid Delgado says that friendly competition brings out the best in everyone.
We feel that Hongqi, with its heritage, a long track record being one of the oldest luxury car companies in the world, if not especially in China, combined with innovation, new design, cutting-edge technology, sustainability, combined with in a package which we feel that can offer something different from our competitors, both the legacy players as well as many of the new brands coming in.
With the economy on the rise and more Filipinos looking to upgrade their rides, Delgado says they're seeing steady growth in the local market.
Hongqi Manila Bay is the newest showroom of the Chinese luxury car brand to hit the Philippines. It may be the new kid on the block, but it's already setting its sights on spreading beyond Metro Manila.
Next on the map for Hongqi are Cebu, Pampanga, and more parts of Metro Manila as it gears up for a wider rollout. Showrooms in BGC, Alabang, and Quezon City are already up and running. And at the Manila Bay launch, Hongqi did not come empty-handed. They introduced two fully electric models, the EH7 sedan and the EHS7 SUV. As the country gradually shifts toward cleaner and greener mobility, embracing battery electric, hybrid, and plug-in hybrid cars, Hongqi is shifting gears too.
When we launched with both EVs as well as ICs, but this year we're again focusing more on the EVs and plug-in hybrids, and we'll be gradually moving to a more sustainable future.
To support the Philippines' EV push, Hongqi is also gearing up to launch its own charging network, complete with a handy mobile app showing available stations and offering a payment system. The goal is to strengthen the brand, grow the dealer network, and bring in more models to meet the evolving needs of the Filipino car market. For BNC Mobility, G. Baroga.
We're taking a quick break. Business 360 will be right back. Welcome back. California is taking the Trump administration to court over its controversial deployment of National Guard troops to Los Angeles amid protests on immigration raids. The lawsuit was announced by Fil-Am California Attorney General Rob Bonta, who points out this is the first time since 1965 that a U.S. president has deployed the National Guard without a governor's request. The suit accuses President Trump of overstepping his authority and asks the court to declare his actions unlawful.
The goal of the lawsuit is to secure a declaration from the court that the Trump order federalizing the National Guard and deploying them to Los Angeles was unlawful. We will also seek injunctive relief and a restraining order at the appropriate time. And yes, we think we will win. We only bring cases we believe we will win based on the law and the facts and our analysis. We wouldn't bring this one if we weren't confident of our success. We think that the conditions required to invoke the statute here, 10 U.S.C. 12406, were absolutely not present, and thus the Trump administration's reliance on that section of the law was inappropriate.
Meanwhile, the U.S. military is sending about 700 Marines to Los Angeles on a temporary basis as the White House awaits additional National Guard forces. The move marks a sharp escalation in Trump's response to street protests, raising legal and political stakes nationwide. President Donald Trump orders the Department of Defense to deploy an additional 2,000 California National Guard members to the Los Angeles area amid ongoing protests in the city. In a social media post, California Governor Gavin Newsom accused Trump of trying to provoke chaos with the additional deployment. Meanwhile, an Australian journalist was hit by a rubber bullet while reporting live about the protests. 9 News said its reporter Lauren Tomasi and her camera operator are safe and will continue covering the event. Elsewhere, Israel releases photos of climate activist Greta Thunberg at the port of Ashdod after naval forces intercepted a charity vessel headed for Gaza. The vessel, called Medlin, was part of a humanitarian mission by the Freedom Flotilla Coalition aimed at delivering aid to the besieged ship. The Israeli Foreign Ministry said all passengers, including Thunberg, are undergoing medical exams to verify their condition. French President Emmanuel Macron confirms that Paris is in touch with Israel, demanding the release of French nationals detained in the raid. The incident has sparked outrage in Europe, with thousands taking to the streets of Paris to protest Israel's actions and demand the release of those held. World leaders scientists and activists gather in Nice for the 3rd UN Ocean Conference, aiming to tackle escalating threats to the world's oceans, from climate change to pollution and overfishing. UN Secretary General Antonio Gutierrez urged countries to ratify the 2023 High Seas Treaty, which would allow the creation of protected marine areas in international waters. Currently, only 1% of these waters are under protection.
Nations are now addressing navigating new waters on seabed and seabed mining. I support the ongoing work of the International Seabed Authority on this important issue. The deep sea cannot become the Wild West.
French President Emmanuel Macron announced that 50 countries have already ratified the treaty, with 15 more expected to follow. The treaty requires 60 ratifications to take effect and is crucial to achieving the global target of protecting 30% of the planet's land and sea by 2030. Now, before we go, Apple wraps up its biggest product reveal of the year, unveiling a sleek new liquid glass design and a suite of AI upgrades for iOS 26. The tech giant introduced real-time translation for calls and messages, along with a new partnership with ChatGPT, bringing image generation and other AI tools into its native apps. Apple also stressed that user privacy will remain a top priority.
There are moments when you'd like to express an idea, question, or feeling, but a language barrier gets in the way. To help you communicate across languages, we're introducing live translation. With Apple Intelligence, live translation can translate conversations on the fly. It's integrated into Messages, FaceTime, and Phone. And it's enabled by Apple-built models that run entirely on device, so your personal conversations stay personal.
Unlike rivals, Apple is focusing on practical AI to help users find products online, break language barriers, and boost everyday productivity. The new liquid glass interface, featuring semi-transparent icons and menus, puts the power of Apple's next-gen chips on full display. But despite the hype, Apple's stock dipped 1.2% by market close as investors weighed delivery timelines and competition in the AI arms race. And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BNC, the Billionario News Channel.